Yay. Okay. Hi, I'm here with Ryan Buckholdt with Opes Advisors, and he is, should I say my favorite lender or one of my favorite lenders?
Your favorite.
My favorite all-time Santa Cruz lender. I'm going to probably get a lot of grief for that comment. Edit it out. Anyways, 2020 has been one of the craziest years I've lived through so far. We're just approaching September and we've already had a pandemic and massive wildfires right here on our home turf. And so how is that affecting loans, the lending industry, and our clients' ability to sell and buy homes?
Okay, so Ryan Buckholdt, I'm broadcasting obviously from my closet up at our second home. We were evacuated, so that's why you see this in the background. Right now, how it's affecting funding on properties is FHA, VA, and USDA. So it's kind of the government entities. All of them have said freeze, not funding anything right now in Santa Cruz County. So they just took Santa Cruz County as a whole and said, nope, we're not going to fund any loans. On regular conventional, so Fannie Mae, Freddie Mac, and jumbo loans, what they're doing is they have a zip code list out there on loans that can fund right now. So basically, all of the San Lorenzo Valley is on that zip code list of loans that we cannot fund, including 95060. So they've lumped 95060 together, which is the Lower West Side, Santa Cruz proper, all the way up to Bonnie Doon, some parts of Scotts Valley. So they've just lumped that all together. We're doing exception basis. So we're having to send in a map of where the fires are at, a map of where the house is at. We do have to go out and take a picture showing that the property is still standing. And then on an exception basis, we are allowed to fund those loans that we feel aren't in danger at this point. So that's one hurdle that they have to jump, but they also have to make sure that they are getting the insurance on the property, that the insurance carriers will insure in that zip code also. I've heard from a couple companies that they're not allowing insurance in a couple zip codes, but that one is insurance company specific right now at this point.
So what insurance companies will allow? Do you know? Do you have like a list of people that they can reach out to, or not yet?
At this point, I don't, just because it's a moving target right now. It's kind of going back and forth and containment versus not contained, and where things are getting threatened. It's a minute by minute movement right now as far as what companies will do and what they won't do.
Okay. And then what do you think the time frame on this freeze is? Do you think that it depends on like containment of the fires, or is it like going to follow throughout the year?
No, I think it's just containment of the fires, and when they say it's not a disaster zone any longer.
Mm-hmm.
So I anticipate as soon as they start releasing areas back out, like as soon as they do Scotts Valley, I think we'll be able to lend there after they say that it's not a risk any longer, which reports could be 4 to 5 days from now. I've just kind of been reading everything, and that's kind of what I've heard as prognosis.
Okay. I've been doing my own research, but do you have any resources for people who have recently purchased a home in these areas who have been either evacuated or lost their brand new homes to them, as far as like how to walk through the insurance claim process and how that looks as far as like continuing to pay your mortgage? What are the like outlines of that?
I think again, that's going to be company specific. Just on my own experiences that I've been through. I haven't been through a fire, but I've been through where a pipe burst in my house and kind of went through the flood process. And it was basically call the insurance company as soon as possible was number one. Number two, get an adjuster out there as soon as possible. They kind of go through the run through of what things are going to cost and so forth. And then also at that point, the company was able to find me another property because I did have to move out, help me find another property, or I also turned in properties that I wouldn't mind staying at. And then they helped me identify those properties, and then they worked with my general contractor on getting the property rebuilt, fixed, and getting paid and all that good stuff. The mortgage company is involved because when the insurance company cuts the check, they usually cut it to the homeowner, the general contractor, and the mortgage company. So first of all, they send it to me. I have to sign it. I send it to the mortgage company. Mortgage company has to sign off on it and then send it to the general contractor for payment.
Got it. Okay. So if you guys are out there wondering what to do, reach out to your insurance agent and have them walk you through the steps that you need to file a claim. And then what are we looking at as far as like rates and terms right now for new home loans?
So right now I'm seeing anywhere from, I'd say 2.625 all the way up to 3.125. All that depends on loan amount of if it's 510 or lower. And then if it's a jumbo loan, so there's the different variances in it. On refinances, so back a couple weeks ago, the federal government came out and said, we're going to charge a 0.5 point on every refinance going forward as like a little refinance tax. Well, last night they came out and said, yeah, we're going to waive that until till December 1st now. So now interest rates overnight on refinances just got cheaper again. So if you missed the boat and thought that, its rates went up and you couldn't get it because of that little tax that they put on there, now it's waived until December 1st. So that doesn't mean wait until December 1st. That means kind of like October is when you can lock in because it's loans delivered to Fannie after December 1st. So if you're thinking about refinancing, you're probably going to want to do something before October 1st.
Can you look at my numbers and get back to me?
Definitely.
Okay. What are you seeing in regards to client needs now versus last year? Are they needing more hand-holding, attention, education, or are they just like, these rates are phenomenal, where do I sign? Let's do this?
Yeah, a little bit more handheld, because what I'm seeing right now is there's a lot of first-time home buyers right now. But these first-time home buyers are buying in the $1 million range, $1.25 million. So it's a big purchase for them, being a first-time home buyer, because they're leaving the San Jose area, San Francisco, Oakland area, coming here to Santa Cruz to buy a property, is what I'm seeing. So this market definitely is a little crazy right now. We're doing really quick closings. We're going in. Some people are releasing all contingencies in order to get the property, which I don't think is the norm for Santa Cruz. Maybe San Jose, San Francisco, that's the norm. But people are getting aggressive now because they want to be able to get the properties that they're making offers on.
Right.
And my only other thing is double check your insurance. Double check what you have on there, how much, things would actually get covered. I had a policy on one of my commercial properties that we have that was underinsured, and I thought about it last Thursday, and I was able to jump on the phone and talk to my insurance agent and up that insurance that day on Thursday, just to make sure it was covered correctly so that I could sleep on Thursday night. So I'm glad I did that. So double check your insurances, double check how much costs are to rebuild here in Santa Cruz, just to be able to sleep at night and know that you're taken care of if something were to happen.
Yeah, that's good advice. What other advice would you give to our first-time buyers or buyers in general in order to be prepared should they find their dream home or their perfect home?
Just get everything lined out. When you buy a house, I'd say 90% of the people go fall in love with the house first and then look at financing afterwards.
Yeah.
So that's a sticker shock type situation where they're like, oh, this great $1 million house, and then they see how much the payment is and they're like, oh wow, I didn't know it was going to be that much. Or some people are completely happy with, oh, I didn't know it was going to be that little compared to the rent I'm paying. So just knowing what it is, just even talking to a finance person before you go out and fall in love is pretty important, I think, just to make sure you know what your numbers are. Also, people are a little skittish about pulling a copy of their credit report of, oh, I don't want to ding my score, but it's an absolute necessity. And the sooner you do it and the sooner you know what your score is, the better, if you have an issue on there, that you can take care of a situation that you might have in order to get better financing or a lower interest rate on the home mortgage when you're purchasing.
Okay. Any final words? I have to go meet an appraiser in the 95060 area code, so.
Okay, perfect. final words is there's a lot of people right now who want to get into a 15-year fixed, pay the house off as soon as possible. There's a lot of people who want to put every penny into the house. I'm kind of the opposite direction. I'm kind of put as little as down as possible and keep a savings account. The 30-year fixed versus 15-year, take the 30-year and then make 15-year payments if you want to. Just always have a cushion. Like this whole coronavirus pandemic, like that was scary in March, and now we're coming into the fires and everything. And so it's just like one after another, and really cash is king. Like if you needed to leave your house and go rent another house and now you need a security deposit of $3,500, I'd way rather you have money in your bank account in order to fund any curveball that life sends you. Mm-hmm. And right now it just seems like curveball after curveball after curveball. Mm-hmm. So just be prepared and have your cushion there available if you need it, rather than paying off the house and really just take care of yourself and your family is, I guess, my last thought on that.
Okay. What is that formula? I know that a lot of people do get a 30-year, and then if they make 2 extra payments a year, which they can spread out over the course of the year, it decreases their mortgage by 7 years. Is that correct?
Yeah, that's about that. It depends on loan amount and interest rate and all that, but it is about 1 extra payment per year does equate to about 7 years shorter in mortgages that they would have to pay.
Okay.
Yeah.
All right. Well, I appreciate you being here and educating us. And call me later. I do want to look at numbers. If they can be as low as 2.6, I think that would be beneficial to refinance, right? For me?
Probably. Yep.
Okay. I'll be in touch. Thank you,
Okay,
Ryan.
cool.
Say hi to the family. Be safe.
Thank you. You too. Take care.
I'm going to unrecord. Stop.